This is just a wonderful panel where we're going to talk about the developing and developments in panels. With better payment rails emerging at speed, this fireside chat looks at what's been built so far and what's still ahead as industry leaders and partners push for scalable, sustainable growth across Africa's digital economy. I'm pleased to welcome on stage Hannalie Marsh, Ambassador of Women in Payments Africa, and Gabriel Swanepoel, Country Manager for Southern Africa at Mastercard. Hannalie and Gabriel, I'll let you introduce yourselves. The floor is yours.
Thank you so much, Anton. So my name is Hannalie Marsh. I'm a payments consultant. I've been in this industry for more than 20 years. It's been a while. Gabs and I have known each other for many years. And I'm very proud to represent Women in Payments Africa today and to have a chat with Gabriel.
Thank you, Hannalie. Likewise, I've known Hannalie for many years in the payments industry for more than 20 years, last 10 of which was spent at Mastercard. I'm the country general manager for Mastercard in Southern Africa, meaning I look after the 10 southernmost markets across the continent based out of Johannesburg.
Well, that's really cool, and we're very excited to be here, and thanks for joining us. There are quite a few things, Gabs, that we've seen over the past 20 years in this industry. Some of the topics have sort of remained top of mind. I mean, financial inclusion, that we'll speak about a bit. Remittances, I think that is very topical for this specific audience. But in your experience over the last 3 to 5 years, what have been some of the major innovations, transformations, or just noteworthy initiatives that you've come across?
So I think it's important to take a little bit of a step back. I think if we think about the broad African context, there's a couple of things we need to recognize. One is most youthful population in the world. Mm-hmm. Secondly, the continent is divided into 54 jurisdictions. That makes for regulatory complexity. We know that Africa hasn't been hampered by all of the legacy technologies that's been deployed. And so you've got best of breed telephony across the continent. And I think against that backdrop, there's a couple of fundamentals that needs to be recognized when we talk financial inclusion. The first one is convergence. And when we talk about convergence, we talk about the technology boom that has enabled access to a large extent for consumers to be able to consume digital services. Now, for us, access was important over the last 20 years or so, but it really now revolves more around impact as opposed to access itself. And so the important next question then is to say, okay, well, if we do have the technology available, how do we equip consumers to be able to transact? And not just transact in cash, but to transact digitally. Yep. And that is where the opportunity really lies to build out infrastructure and include people within the broader financial services domain. And I think that acceleration, if I can use 2 data points in South Africa, we've seen a 4x growth in terms of digital infrastructure for small and medium enterprises that is able to now sell their goods and services into an economy which more than ever comprises digitally native consumers. Yeah. So young individuals that grew up with a mobile phone, grew up with internet access, want the ability to transact anywhere at any time for as long as they would like to, with the interface that they would like to. And therefore the trick to now think about how do we adapt the business world to be able to meet the consumers where they're at in this digitally native environment.
Yeah. Absolutely. Now, I think, so for many years it was around smartphone penetration, was the big question. It's no longer that, right? It's how do you meet consumers where they are in their day-to-day?
Exactly.
That makes me think a bit, because financial inclusion, if I go back many years, we used to speak about banking the unbanked, which that term has now changed, right? You mentioned SMEs just earlier. And for me now is how do we bring SMEs and the small and medium enterprises into this digital economy to be able to meet the consumers in their day-to-day?
So we have an initiative that is called MADE, which is mobilizing access in the digital economy. And the precept is exactly what you're speaking about. The precept is how do we take legacy environments, so let's choose a sector like agriculture, for example, and then understand what are the different building blocks that we would need in order to enable digital finance or digital transactions within that space. And it basically boiled down to 3 precepts. The first one is that we need to think about digital identification for the widest possible access, if you think of consumers. And if you're able to introduce digital identity, it means that any person, regardless of background or links or access to markets, have the ability to transact with the proviso that there's some form of mobile phone available. And the precept around that is if you couple that digital identity with the digital store of value, this initiative now equips us to take, and we've invested more than 300 billion into this initiative, and it enables farmers, small micro enterprises, farming community within the agriculture space, to be able to link buyers to suppliers and start opening up that trade. In the absence of which, if it wasn't digital, all of that trade would be invisible.
Yeah.
And with this visibility comes the ability to then access credit, the ability comes to access new markets. And that is really where, if we talk about the smaller micro enterprises, we talk about digital financial inclusion, and we stay with the thematic around convergence, it's that ability to then enable more commerce for more people across wider geographies that ultimately provide access for more markets that in turn build up, economic growth in the markets that they operate in.
Yeah. I mean, so you've mentioned identity, and I think, well, at least the South Africans can speak to the headache of KYC and sort of being able to be identified digitally. What are you seeing is happening in that space, specifically if we speak about multi-jurisdiction? So it's one thing to solve for a country, but your initiatives are across the continent. How do we solve for a single identity or a single way to be able to transact seamlessly in the continent and not the country of Africa?
So I think it's important. I think that there's multiple ways to do this, and I think that the traditional approach in the old days was a one-size-fits-all. So if a certain technology or approach worked in Europe or in the States or in the Southeast Pacific, the argument was it should work everywhere. And I think that we know now that from an African perspective, it's nuanced, and we need to solve for the problem statement on the ground. So if you take, again, this MADE initiative that we have, if we took a focus on women entrepreneurs, for example, it's an understanding of, at local market level, what are the pain points that these entrepreneurs face? And how do we then solve for the specific pain points in order to start driving, transaction enablement and value exchange that we talked about earlier? Now, in the case of women entrepreneurs in Africa, it's often around access to inventory, the ability to recon, the ability to, do payroll, the ability to disperse funds, access and payments of suppliers, and to make that come together in a way that serves that particular problem statement for the women entrepreneur. But then also importantly, once there's an understanding of the type of trade that happens, to be able to then provide the e-wallet or transactional capability to expand. And I think ultimately then, if you were to ask me, it's a long-winded way of saying the access to identity gets solved through the provision of utility. And as that utility is provided, it becomes a virtuous cycle around enabling, the ability to trade, and then also the ancillary services that make for, a fuller value proposition that women entrepreneur or smallholder farmer can operate in.
Yeah, I mean, I think that's such an important initiative, and we have to start with these industries in specific areas and then see how we connect the dots, which, I mean, I suppose connecting the dots brings me to remittances then. This has also been, cross-border payments has also been on the agenda for as long as I can remember. What are you seeing happening in that space, both in the continent and then also with the diaspora needing to make payments in and out of Africa?
The success of mobile money across Africa has been talked about, and I think it's M-Pesa's success, but way back in 2007, that laid the foundation in what we now know as MTN, Momo, or Airtel Money, or all of the different operators' solutions. But the precept was domestic money transfer. It always was the ability for persons to send money to each other. And the original use case in Kenya was one around the ability to send money home, right? For the diaspora to be able to work someplace and send money home. So as that proliferated, and the impact and the penetration of mobile money far exceeded what the banks ever could envision or achieve in over 100 years, the need to be able to think about different use cases became more profound.
Yeah.
So, in the South African context, we know that we've got somewhere between 5 to 8 million diaspora Zimbabweans working in the country. And similar to that original use case from a Kenyan perspective in, having the ability to send money home, this diaspora needs to be able to operate, within South Africa and then be able to send money home. And it's very lucrative. I mean, I think on a per annum basis across the continent, the flows are more than $50 billion, and it's keeping on growing. The problem is the normalization around that and the ability to make sure that it's provided at an affordable level, to provide, again, the access to as broad a population as you possibly can. And so from a Mastercard perspective, we have a service called Mastercard Move that enables corridors. So if you think about, a corridor as, to use the South African example again, somebody wanting to send hard-earned money from South Africa back home to Zimbabwe, and to be able to do that with the means available to them, which is really what it's all about. So whether I've got a full banking account, whether I have a card, whether I have a mobile money wallet, I need to have the ability to send money home and do so effectively. And so what we've built out with Mastercard Move is a system that enables more than 150 countries to send flows from an originating market like a South Africa into, for example, Zimbabwe.
And for years the discussion around remittance has been the cost, and how, especially in Africa, how exorbitant the costs have been to be able to move money cross-border. Have we made any inroads in bringing that cost down?
Yeah, I think so. So I think at the moment, the costs could be really high. I think that from a South African Zimbabwe perspective, for example, some of these remittance corridors can be as high as 25%. From a digital perspective, the costs of transfer could vary between 8 and 10, but I think that cost is coming down really quickly, and it's coming down quickly as the market normalizes, and as the ability to cash out across the different networks across the continent becomes more accessible to more people.
Yeah. Then, the other thing that I've sort of seen over my career is how sometimes we build solutions in the hope that someone's going to need it, an example, I think I've shared this with you before, is that we introduced contactless payments into South Africa already as early as 2005. Now, if you ask, the average person, when did contactless arrive? Most of them will say just before COVID, because a lot of people were not particularly comfortable using contactless transactions because they deemed it to be unsafe at the time. Even though we spent lots of time, effort, and energy educating and spending money on it, we had an existential crisis in the form of COVID that suddenly made this a use case that really was required and that people saw the real need for. Are there any of those types of major initiatives, major impacts that will drive the acceleration of the adoption of some of these payment types in Africa? What are the big things that we need to really accelerate the growth of adoption?
So I think that there's three factors. The first one is that we spoke about that enablement piece, the ability to have access to either some sort of a form factor that allows me to transact digitally. I think in Africa, where we are right now, smartphone penetration in South Africa is north of 90%, with utilization at an app basis more than 70%. I think across the continent, that number sits at about north of 60%, which means that from an access or the ability to leverage technology for value exchange, for digital value exchange, I think we're there. I think that we've got scale. The second item, or the second driver, if you want, or thematic, revolves around the utility of the service provider. So, we've spoken about the need for the diaspora to be able to send money home. We spoke about the need to be able to send money cross-border. I think if we were to have this conversation 10 years ago, there wouldn't have been a cross-border transaction. And similarly to how you point to contactless, that's now driven adoption, the same can be said for people not withdrawing cash at an ATM on a Friday, especially wage earners, but rather using their telephones to pay for a Coke and a bread before going home on a Friday night. And I think that ubiquity or accessibility is ultimately then what drives it. So the question then is, well, if we've solved for the technology and we've solved for access and we've created the infrastructure, what needs to happen next? And I think what needs to happen is that between the governments and the regulators, we need to think about the right level of engagement from a policy direction perspective and allow more people to be able to access banking related services like we've done with the MADE initiative that then would allow for the flow of funds.
Yeah.
And I think that as soon as you do that, you've solved for that local pain point that we've spoken about, which then in turns provide the necessary incentive, if you want, for people to transact digitally and would negate the need for cash.
So what I'm hearing you saying is that like we need some involvement from the regulators to be able to help us drive and break down some of those barriers around identification, potentially even cost. I think in some areas cost is an issue because I know that people sometimes still think Africa is a country and that, you know, as in Europe, you should be able to transact cross-border as seamlessly as they do there. The other one that I'm interested in that gained some traction during COVID, but I'd like to understand from your perspective where you see this going, is e-commerce in Africa. Where are we? What is happening? Is this the next big boom, or are we still very much bricks and mortar?
So I think the story around e-commerce and what that channel from a payments perspective can do over the next years will be profound. I think that the economy, again, looking at it from a South African landscape perspective, we've seen e-commerce growth now north of 30% for the last 5 years, consecutively 5 years.
Proper.
And I think that there's been, again, speaking about this generational shift of a digitally savvy generation coming through, that you need to meet the consumer where they're at. I think that there's a couple of examples that shows to that success. I mean, we can't go anywhere these days without seeing a ShopRite 6060 motorbike on the road, right? And I think that what's happened is that this digitally native generation that's comfortable to operate online and would like to harness the power of that technology in order to make purchases is really driving this growth. And I think it goes way beyond, you know, the purchase of FMCG goods. I think we're seeing it now with overseas retailers like Shein and Temu providing goods. I think we've got that consumer-driven economy and the way that users interact with it for personalization in terms of the way that I consume those goods is also driving the utility around it. So I think we're going to continue to see the growth of the e-commerce market. It's going to be driven by personal preference. It's going to be driven by convenience, like the ShopRite 6060s. I think it is a manifestation of the access to global markets and the ability to import goods at a price point that is palatable for a much broader population. And all of that comes together with this melting pot of a digitally savvy native generation that has digital access and can transact online.
I mean, if I think also of, you know, when you do go online into e-commerce, you see all of these multiple payment types, and it's almost like every day there's something new, a new way to pay. What are you seeing in terms of payment types, access to, I mean, we'll call it multi-rail, right? So, I mean, what's happening in terms of convergence of how people pay, or are we seeing more and more types happening, or do we see some consolidation?
I think if we stay with the theme of solving the pain points for businesses and consumers alike, Mastercard is concerned with the ability to allow any consumer to transact at any merchant and to be able to do so in a way where the transaction is protected and in a way where the process is simple, is understandable, and the goods delivered protects the consumer, but the merchant also has the guarantee that settlement will take place. So it's a mouthful, but basically what that means then is we need to continue to solve for more consumers having the ability to purchase goods and services from more merchants. Now, I think that, you know, in an internet era and we've spoken a little bit about e-commerce, the thematic around instant gratification and the ability to, you know, immediately get the service and the product that you purchased or that you want translate into the merchant community as well. So when we talk about real-time payments, the ability to guarantee a merchant that they will receive their money as soon as possible once a purchase is made is absolutely critical from a cash flow management perspective.
Yes.
And that's especially true in Africa. So when we think about real-time payments, we're solving two problems. The first one is that the consumer would like to be able to initiate the transaction, to be able to either pay a person or pay for goods and services, and they want to do that immediately. But similarly, the merchant that's selling that product or service would like his money for the goods or service that he's sold as quickly as possible.
Yes.
So the promise of real-time payments is to make that value exchange as simple and as easy as cash. And so the challenge for us as an industry, not just for Mastercard, but for all of the different ecosystem participants, is to understand how do we make that accessibility easier, and how do we guarantee that once the transaction takes place, that the merchant gets settled and the consumer receives the goods or the services that they procured.
Yeah. Now, I mean, like a lot of those services, those new real-time services are not built on the traditional rails, right? And as you mentioned, one of the big things is that I know as a consumer that I get the goods, the merchant knows he gets the money, but in the inverse is also true. If something goes wrong, I can do a refund, the merchant can get their money back, I can get my money back. What do you see as some of the barriers in terms of, solving for those negative use cases in the introduction of new rails, new methods? If I'm, as a consumer, for example, I'm used to having the ability to go and return a good if I'm not happy with it.
I think the way to think about it is the way that we currently interact with each other. If you and I go out for a cup of coffee and you pay for the coffee and I owe you some money for the concert tickets or whatever the case might be, I might be able to take out cash, I'll give it to you. I don't need any rights for chargeback or repudiation. There was, instant fulfillment around the transaction and both of us are happy.
Yeah.
I think for real-time payments, the same is true. If it's a person-to-person exchange and, there's a service that was provided or I owe you money for whatever the reason is, and I pay you, that could be like a cash transaction. It could be simple and effective, and we can settle that transaction and walk away. I think what needs to be understood, though, is that as soon as we start thinking about your first example, where I might be buying a television for 30,000 Rand, or I might want to send money to the other side of the continent, there has to be some protection for me as the consumer that originated the transaction, but there also needs to be some level of guarantee for the merchant in this instance for selling that goods or service. And I think that's where the rules around payments, as it becomes more commoditized and as it becomes more real time, has to be managed within that construct. That the more complexity is introduced in the value exchange, the more we are able to make sure that the same security that you currently enjoy with a traditional Mastercard card-based transaction translates into whatever real-time payments eventually evolve into.
Yeah.
And in order to achieve that, it means that all of the different stakeholders need to align around the right level of standards and the right operating methodology to ensure that the simplicity that we currently have in digital payments is adhered to regardless of how the market evolves over time.
Yeah. You mentioned security, right, which is something that, like, I think we're all aware of. We've all had the WhatsApp scams. We've all been phoned by a supposed fraud department. As we digitize and as we have the introduction of AI and all these, fancy things, what keeps you up at night around, keeping the customers and the merchants secure? What do you think is happening in that space?
Hannalie, I mean, we get very excited about how smart the systems are now, and access and the ability to leverage technology at a low price point. But the reality is, as we get access to those systems and services, so does the fraudsters. So under no stretch of the imagination, artificial intelligence is being used by fraudsters as much as it's being used by normal consumers. And so what keeps us awake at night is how do we make sure that we protect your money and do so in a way that it can't be compromised.
Yeah.
The security is robust, and that this experience around transacting is still as simple as it's always been. And in order to do that, we work with government stakeholders, we work with our banking partners, we work with the broader fintech community, and we make sure that We put the right level of tools out there that, all of these different stakeholders can utilize in order to protect their customers. But then equally also to raise awareness and visibility across all of these different ecosystem participants that in the event where there is a fraud incident, we're able to very quickly communicate the origination of whatever that exposure was and notify the different stakeholders as fraudulent funds flow through the ecosystem.
Yeah.
Ultimately, the promise that we have then is we make sure that you can be as confident as ever that you can use your card or your wallet or whatever it is that you're using digitally in a secure way, and that you are protected within that environment. I think what we're going to see moving forward is that the fraud tools will become more sophisticated, and it has to be as, payments become more real time. Yeah. And we break down legacy barriers in terms of access. And therefore, it's equally important for us to make sure that all of the different stakeholders within our environment from a payments perspective are also able to enjoy those tools and have access to them.
Yeah, thanks, Gabe. So, I mean, we've spoken a bit about some of the themes that we've seen over the last couple of years. We've spoken about what's happening at the moment. If you had to have the crystal ball and you could predict what we will see in the next couple of years in the space, whether it's like a bit of the same, but just acceleration, or if you think there's some major, big new innovations coming, I mean, what would be interesting for us to look forward to?
I think firstly, two things to quickly mention. The one is that, I think from a smaller micro enterprises point of view, I think Africa is set to boom. I think we're going to see a lot of entrance into the formal economy at the back of digitization that's driving the ability to participate in the formal economy with access to new markets. And I think what that in turn will do is what we call agentic AI or agentic commerce. And it's the ability to no longer think about applications on your phone, but the ability to talk to ChatGPT or talk to Grok or talk to Perplexity, choose the bicycle that you like and just ask Grok to order it for you with the payment taking place automatically at the back.
Sure, that sounds really daunting and really exciting. I see we're out of time. So if you have any questions for Gabriel, please feel free to come and chat to him afterwards. But I'd like to thank you for your attention. And Gabriel, thank you so much for sharing all of your information with us here today. Enjoy the rest of your show, everyone.